Smart money just repositioned over $3 billion in gold this week. Retail traders are panic buying the headlines, but institutional flow is heavily shorting. Something big is coming, and if you leave now, you will miss the real story.
Welcome to This Explainer. There's a shocking disconnect in the market right now. Retail traders are reacting emotionally to geopolitical news. They see headlines and automatically buy gold for safety. But smart money doesn't trade the news. Managed money and swap dealers are actively trapping retail buyers. They're repositioning billions based on cold, hard data.
Section 1. Macro Forces and USD Flow. Let's look at the fundamental tailwinds driving this capital rotation. 74.4%. That's the shocking probability of a Fed rate hike this year. It spiked up from just 45% last week. This aggressive shift creates extreme urgency in the markets. Smart money is rapidly rotating capital into the US dollar. They're front-running the Fed.
Why this sudden, violent shift? We're seeing a massive macro catalyst convergence. The DXY just hit a 2-month high. Friday's NFP surged to 172,000. That completely crushed the 85,000 estimates. Plus, OPEC cuts are driving massive inflation fears. Institutions are aggressively buying the dollar and dumping gold.
Section 2. Unmasking institutional order flow. Okay, let's dive into this top-down chart evidence.
Look at the 4-hour chart. We have a massive bearish market structure break. Notice those huge, aggressive red displacement candles? That kind of volume isn't retail selling. That's the heavy footprint of institutional algorithms. They're pushing price lower and completely dominating the order flow.
Now drop down to the 1-hour and 15-minute charts. Smart money always leaves clear footprints. We see unmitigated fair value gaps and bearish order blocks. These aren't just random technical zones. Algorithms use these exact imbalances to reload massive short positions. They're using them as precise entry targets.
We absolutely must talk about sell-side liquidity. These are pools of stop-loss orders resting below old lows. There's a massive pool between 4280 and 4300. This liquidity acts as a giant magnetic draw. Algorithms are actively targeting those retail stop-losses, prices being drawn down there like a magnet.
This brilliantly illustrates our immediate short-term target. We have a precise fair value gap between 43.25 and 43.40. Price will likely pull back to rebalance this void. Once that inefficiency is filled, watch out. The aggressive algorithmic sell-off will continue downward.
Section 3. Official XAUUSD Trading Plan. It's time to stop analyzing and start executing.
Professional traders trade probabilities, not certainties. We have a 75% probability backing this bearish structure. So we're aligning entirely with institutional order flow. We aren't trying to pick bottoms here. We're looking exclusively for continuation shorts.
Here are your strict institutional execution parameters. Our primary bias is to sell. Our entry zone sits precisely between 43.18 and 43.36. Your hard stop loss must rest securely between 43.42 and 43.50. We take first targets at 43.15, then 43.05. Leave a runner for a cascading target down to 42.40. Use strict risk management.
This bearish bias is completely invalidated with a firm H1 candle close above 43.55.
Section 4. Smart Money Power Insight. Let's cover one final, critical lesson before you execute.
Retail traders react to price, but institutions react to liquidity. Let that sink in deeply. If you're only reading candles, you're missing the real story. Price moves toward liquidity, never toward your opinion. Don't become the liquidity.
It's time to unmask the algorithms for yourself. To follow future trading opportunities and market breakdowns, open your trading account today. Just use the link provided in the pinned comment below. Make sure to hit subscribe, trust the data, follow the flow, and I'll see you next time.